Stock market today analysis for the last trading day of the year, Friday, December 30th, 2022. Before we look at the futures market, the broad overall US markets, the main 12 sectors that make up the markets, and maybe a couple other things, before we look at all that, I want to let you know that if you are relatively new to the stock market, in my opinion, the best way to get started is to learn how to sell cash secured put options on a stock that you wouldn't mind owning the rest of your life. You see what I'm doing? I'm showing you the I Have Success website, the mission page, and the mission of I Have Success is to help you begin your trading journey by learning how to sell cash secured put options. That's the first part. The second part is in a way that allows myself, that's me, to grow and improve in the process. Why cash secured put options to start with? Because at the end of expiration date, if you're selling cash secured put options on a stock that you wouldn't mind owning, then you win regardless of what happens. One outcome can happen, and that outcome is that the contract expires worthless and you make money. The second outcome that can happen is that the contract does not expire worthless. You buy a paper asset that you're happy to own, and you got paid a premium to do it. That's it in a nutshell of why I absolutely love it. It's great for busy people. In fact, right here, take a look at this corner right here, and boom, you see that link that just popped up? That's 5 reasons why I love, or why I think you should sell cash secured put options, why everybody should. And in the description of this video, you're gonna see a link to ihavesuccess.com website, and below that you'll see like playlist for beginners, and beginners is going to be in all caps. That playlist has 5 videos that will walk you through theoretically everything you need to understand to at least get started. And then at ihavesuccess.com, download this cash secured put stock selection guide. Download this 3 stocks I sell cash secured put options on. And this one is not for you to start selling cash secured put options on these 3. There's a good chance these 3 are not suitable for you. Suitable for me, but not necessarily for you. But when you take the fundamental outlook of the thought process that goes into this, and then you combine it with that playlist that's in the description, and you combine it with watching that link to that video that was at 1 minute, you're going to be in a good situation to start paper trading, right? Start doing simulated trades, practice it, play with it a little bit. It might be the one strategy that you are going to use the rest of your life, or it might just be a strategy that you have in your pocket and you end up learning other strategies to complement that. Find out for yourself, but please feel free to look through those things. And now let's get into looking at the futures market. Futures of the VIX, see that? Doji, open and close, the same place. Overall, on this, this is a 1 day. Each one of these candles represents 1 day. And we're looking at 1 month of data. This is a 200-day moving average. So overall, VIX is close the day here, the first day that we see. Close here. So overall, VIX is higher on about 30 days of trading, but it's below that downsloping 200-day moving average. ES, which is the futures for the S&P 500, below a downward sloping 200-day moving average, and overall lower. Basically has been going down from here. Opening day it closed here. Last day of the trading month closed here, down below a downward sloping 200-day moving average. Dow Jones still above. Oh, and let's point this out. 1, 2, 3, 4, about 5 trading days seems to be sideways. Now these, right, it's in line with here, but these are 2 outliers right here. But overall, we see this line right here. So it seems to be in this trading range right here, which we see something similar right here with the Dow Jones. We got the sideways going sideways, popped up a little bit here. One thing that is a little different, these 2 days were a little higher than these 2 days over here. But look at, first day closed here, last day closed here, down above a basically flat 200-day moving average. NASDAQ futures, same thing as this one, been sloping down under a downward sloping 200-day moving average. Russell 2000, down under a downward sloping 200-day moving average. And yeah, you know, kind of got the sideways. There's a lot, it seems to be a lot more volatility in the Russell lately. Maybe that's all the time. Honestly, one reason why I make these videos is so I pay deeper attention. Before I was making these videos, I just basically do the strategies that I normally do. So I thank you guys for being out there, and girls, and I thank you know, YouTube for allowing me to put these videos on here, because even if nobody watches these videos, I get a lot of benefit from making these videos. So, you know, it's a win-win. You watch a video, I win. You don't watch a video, I win. That's how I like to set my life up. I like to set my life up where I win no matter what. And that's why I suggest you learn to sell cash secured put options on stocks that you don't mind owning, because you win no matter what at expiration date. 10-year treasury yield. Remember I was talking about this? See this here? That 3.8? I was talking about that, wasn't I? Here we go. It got down there and touched it. You can see it got right there, but it pulled back just a little bit. So let's see going into next week if this is going to start becoming support now, which it very well might, you know, based on this 200-day moving average sloping up. We're above that 200-day moving average. It's a strong slope up. I talked before about this W pattern here, and the left part of the W being lower than this right part of the W. Right here there was resistance, that little I don't know what you want to call it, middle of the W, and then it got up to here this day, but this day, look at that, boom, opened right around that resistance, and it's just been going up since then. So there are some reasons to believe that this will continue to have support right here at 3.8. But as I said yesterday, and maybe some other videos, definitely yesterday, we're looking at politics right here when we're looking at the 10-year treasury yield. And also we're looking at politics when we're looking over here at gold and silver. But before we get to those two, let's look at crude oil. Below a downward sloping 200-day moving average, and it seems like this, what is that? I can't see. Yep, I guess it's ooh, how do look at that, I don't know what I'm doing. I guess it's that 80 point right there. The 80 price seems to be a bit of a support resistance depending on what side, you know, the asset, yeah, in this case the asset's trading on. Natural gas. I like watching the future of natural gas. I've actually never traded it. I tried paper trading it a little bit, but Eric Townsend from Macro Voices calls this the Widowmaker. And you know, if you particularly you know, have a death wish, then, you know, maybe try it out. You know, you can, if you have a death wish, just, you know, skip the simulated trading, just go into real money and lose all your money, and you know, make your significant other a widow. I'm just kidding about that. Don't take that seriously. Don't take that out of context. Don't just, like, you know, take a little snippet and be plastering that all over the internet saying, you know, Brent from so-and-so wants everybody to do this. No, I'm joking. So anyways, you can paper trade it if you want. But yeah, someday I want to spend some more time figuring how to trade that out, just for, you know, intellectual curiosity, fun reasons. Gold, look at this. Remember I had been talking about like see how you can see, like, it's sort of got this, like, this line going up, right? And it's sort of got this line going flat right here. When you see those type of patterns, a lot of times when it's flat on one side, there's a good chance it'll push to the side that it's flat on. If it keeps getting more wound, it's like tightening that spring, tightening that spring, tightening that spring, and then boom, it can pop off through there. Now, if this was happening, it is above the 200-day moving average, so that makes me think, you know, even more that it could happen. But if this was above the 200-day moving average and the 200-day moving average was upslope, then it would be like, yeah, absolutely. If that was happening and it was not a political thing, then even more. But because there's politics involved, and the politics kind of like keeping gold on the lower price end, we'll see how that plays out. But I would not be surprised if we see it bump up. Same thing with silver, but it's not as, like, you can see silver, it's not as like getting as compact here, and we see a little bit like it over here. It tested above that 1820, testing above that 1820 today, you know, and then that's debatably whether it's going to break out or whatever. I think the big thing is going to be around 1840. You see right here, try to get up to 1840, really pulls back. Touched 1840, a little bit over 1840 here, really pulls back. So we'll see how it ends up going over there. Now silver, kind of doing the same thing, Looks like it might start mimicking this really tight clustering a little bit later. So we'll see on that. Bitcoin still below a real steep downward sloping 200-day moving average. As more saga unfolds about all this FTX Jon Corzine MF Global Part 2. And if you're not familiar with that, to go ahead and look it up. MF Global, Jon Corzine. And to me, it seems like, you know, I stopped kind of following it. It keeps popping up. I keep hearing about it, but I'm not actively, you know, trying to absorb information about this anymore, because to me it just really seems too much like political corruption, and seems like MF Global Part 2. And so, you know, whatever happens, I would not be surprised in the least if if everybody kind of gets off lightly. They make it seem like it, you know, they're getting this big punishment, but overall, just kind of getting a slap on the wrist. That wouldn't surprise me one bit at all. In fact, that would be very much exactly what I would expect if it is going to be MF Global Part 2. General markets on the daily chart, same thing, 30 days. We already looked at these in the futures. UUP, which representing the dollar. Look at that. It's kind of staying in this downward channel here, right? Here you can see this kind of bottom of the channel, kind of top of the channel like this, and it we don't see how the pattern, little cluster pattern, looks here, but look at this. See how they're kind of, it gapped down. It does this unique formation thing, gaps down again, does something not exactly looking like that, but you know, here one candle, two candles on the third candle, boom, it pops up, kind of floats down again. You know, you got that, pops up, boom, floats down right here, and then a bit of this gap down, although the gap between here and here and here and here, this one is tighter, and it does this kind of weird looking thing. You know, I was waiting to see what was going to happen, I remember, on that candle. And but yeah, still seems like it's kind of in this channel, you know, to the downside. So we'll see what happens. We see it touched this price right here, which is probably what's under there, maybe 27.80, maybe, I don't know. I can't see, it's covered up with the price, but and then it went a little bit under that. It touched here, basically touched there, almost touched there, whatever, close enough, you know, for what we're doing right here. It came real close to that point over here, goes below it, and then boom, look at that, pulls back up. So maybe we got some. If we were to look back in the past to the left, if we had more like 6 months, a year, whatever, maybe we would see around somewhere in that 27.80-ish range. Maybe it's got some support. TLT represented the 20-year treasury yields. Look at this, below a downward sloping 200-day moving average, and I forgot to mention that about this upward sloping 200-day. Below that downward sloping 200-day moving average, we see that it made this rally up and then start falling apart, and for the last 4 days kind of going sideways. So we'll see if it's gonna break that. But look at this, low, lower low. VIX opened the first day with a close here. This is where we are today. So overall up a tad bit on the month, but if you look at the whole trading range, it just went sideways. So depending on kind of how you want to look at it, below that 200-day downward sloping 200-day moving average, and seems like around 22 bucks, somewhere in there, around 22. I don't know if that's actually dollars, but whatever. Around 22, it seems to have some stickiness. You know, if it gets too much above 22, it seems to pull back to it. If it gets too far below, it seems to pull back to it. and SPX, Dow Jones, NASDAQ, Russell 2000. These are the 4 big indices that make up the stock market. What you can do in a really quick look is, where are the 200-day moving averages? Where's the price action in relation to the 200-day moving average? And is the 200-day moving average sloping up, down, or sideways? SPX, below the 200-day moving, downward sloping 200-day moving average. NASDAQ, below the downward sloping 200-day moving average. Russell 2000, below the downward sloping 200-day moving average. 3 out of 4 below the downward sloping 200-day moving average. 1 out of 4 above a flat 200-day moving average. So if you're just looking at that, that tells you what? It tells you that overall the stock market's been down. And when you look at the price action in relation to these, you see anything bullish looking? What's going on here that makes you think that there's going to be a big move to the upside? Not that that makes it sound like I'm assuming you think that it's a big move to the upside. But when you look at this, you see anything in here that's giving you an indication that there's going to be a run to the upside? Not to me. At the most, what I'm seeing is some consolidation, sideways consolidation, beginning of sideways consolidation. And there's a big difference between up and sideways, right? Big difference. So, but all these indices ended the day green, but this is the only one that kind of even looked like a halfway decent green candle on NASDAQ. Everything else is, looking pretty puny. And look at the day before it. What you can also do though is, when you have a big candle, whether it's a downward candle or an upward candle, but this one, look at where your price action is in relationship to this. So for example, this is basically kind of like in the top maybe 20% of this candle. This one was a pretty big candle, but look, yesterday it closed here. Today it closed just a tad bit lower. Basically, it almost went sideways on a day-to-day. Now here we've got a big downward candle here. Like this down movement here is significantly bigger than this up movement here. So we look at end of the day here, and then Thursday it opened here, which is in the bottom 50% of this bear candle, closed up here. Boom, look, it closed in like the top 10% of the body, not the full trading range, right? That's the full trading range, but it closed up here in the top 10% of the body of the candle. And then what happened today? Boom, we're back down trading in the bottom 50% of this bearish candle. That is, if you look at it that way, that's signs of bearishness. It's not even testing to the upside, it's testing to the downside. And then where does it close? It closes lower today, closes right here, which is lower than yesterday. And where is that in relationship to here? Okay, it's at least in the top 50% of the body. But so you can kind of put stuff together like that. And same thing throughout there. Let's go through these 11 sectors of the market. Again, we can look at real small details, comparing, this candle to the other one. Where did it close? Where did it open? Where did it do in relationship to that? Another thing that is good to do is you put different time frames maybe on one chart. So you may be looking at a monthly chart, a weekly chart, and a daily chart, and see are things in alignment. For example, if you were to do that, let's say on the monthly chart, let's say this is what you see on a monthly chart. You see everything going down. But on a weekly chart, you kind of see everything going sideways. And then on a daily chart, you see everything kind of going up. Well, it could, overall, this is your monthly is your really big wave. Your weekly is kind of your intermediate, and your daily would be your small wave. So you can have the daily moving up and down inside of a bigger weekly, and that is inside of an even bigger monthly. Now let's say that you're looking at the monthly and you see that on the monthly it's in this downtrend. And then you look at the weekly and you see it's in this downtrend. And then you look at the daily and you see it's in this downtrend. When your monthly, weekly, and daily are aligned, you have the potential for a powerful movement in that direction. Now, another thing you'd want to look at, is it more of the beginning of the movement, the middle of the movement, or the end of the movement? A lot of times in the stock market, people are talking about, we're in the fourth inning or whatever. They're comparing it to baseball or something. So you wanna have a feel for where that's at. How do you learn this stuff? You paper trade it. You paper trade it. Let's go through this real quick. We're just gonna go through and kind of look at those. Okay, technology. Downward sloping 200-day moving average. What's it doing? Opened. Had an up day there. We had a red candle here. We got a green candle there. We got a green candle. Oh, look at that. It's doji. Look at that. It's like that's almost a doji. That's a little bit of a stronger candle. That's a bit of a stronger candle. That's kind of a weaker candle there. That's a pretty strong candle. But look at in relationship to what? Boom. Look at that. All right. Just one candle is not negating all of this stuff. It pushed up here to this 47. Look, it's not even getting past that. If it were to get past that, what's the next place it's got to get past? You would somewhere in there, right? And then if it gets past that, where is the next thing? Here's maybe there's some resistance, in here too, but definitely 52, right? So this one still above that 200-day moving average, a bit of a sideways. Look at this. Been sloping down, kind of going sideways. That's a good decent green candle there. Look at this, traded all the way down there. Same one, big old red candle here, but this, even though this closed red, look, what does this show you right here? It shows you that when prices got down to this level, that buyers, that's why it looks like this. See how it's wider here and this skinny here? Why is that? Why did that happen? Because when it started trading down here, people stepped up and started buying it. They started buying it and they pushed it to here. So it must have been that somehow people felt it this sector was underpriced at these levels. There can be some other things too. I mean, it's not the be all end all. You're really being a detective here. You're putting clues together. I don't know, like in my assessment of trading, there's no way I could ever, when I'm making decisions, I'm not making decisions that I could get a jury to agree with me in a court of law. Like, there is not a beyond a reasonable doubt type of thing here. From my perspective and everything that I've learned that hasn't been fraud and scamish type of BS people are selling or talking, you're attempting to make the best decision with inadequate information. And so that's what you're doing. You're trying to put, all these things together, make the best decision with limited information. And that's why you need to be able to manage risk. Look at this. Real estate. It just kind of went sideways, boom, fell down. Look at how it had this, went up here, tested this higher area, fell back down, tested this lower area again, went up here, tested it a second time, boom, and really started coming down. And isn't this interesting? Instead of testing this area here, it just basically opens here and kind of gap down like this, and then wow, really sold down into here. And then after that, it wasn't done, dropped all the way down to here. Sort of like a step down like that. Same thing, kind of going sideways, boom, drop down. Now it's consolidating, going sideways. So Sunday, I'm going to be releasing a weekly chart review. We'll take a look at the bigger month, maybe even look at some yearly charts. Look at a really big time frame, and just kind of play with those things. But ultimately, it depends. Everything depends on your lifestyle and what you want to get done, right? You don't need to do all this stuff. You don't need to monitor all this stuff every day. But maybe depending on what strategy, if you don't want to monitor all that stuff, then pick a strategy that fits into your lifestyle. Because this is what I've seen people do before. They get all excited about trading and they start dumping all this time into it, and then after a short amount of time they burn out, and then they're basically not trading because they're trying to do some sort of trading protocol that ultimately doesn't fit into their lifestyle. So consider your lifestyle. Consider how much time you actually have to dedicate to it. A lot of getting good at this is just doing it over and over and over. And sometimes it's not even putting trades on. Sometimes it's just watching stuff. I live in the state of Hawaii, and a lot of people surf here. And I'm definitely not a good surfer, but I've just kind of, since I've lived here for a while, I have some understanding of surfing, right? If I didn't live here, I would have even less understanding of it. And when people are surfing, they're not trying to catch every single wave. Like, they're waiting for a good wave, and there's a little bit of timing with it. And because, like I said, I'm not a great surfer, so I don't know exactly. I can't describe to you how they're, what they feel or what it is they're looking for, what these things are happening. But there's a bit of a timing to it. But what I do have a lot more experience with is grappling. And with grappling, there's a bit of feeling your opponent, and and kind of, once you've grappled a certain amount of time, you start kind of getting a feel of what people generally do under certain situations. So same with trading. It's good to kind of focus in on just watching, getting familiar with what, whatever. If you're going to trade XLK, what does it normally do? Where's its normal trading range? What happens when this happens? What happens when that happens? What are these, these different things? So pay attention, paper trade. That is, a really big thing. And if I can, I'm going to put another little card linked up right in here that will be to a playlist, paper trading playlist that I recently started. Maybe there's 5 or 6 videos in it at the time of this recording. But watch those. Don't watch them to copy me. Watch them how I just learn what you can learn from it, and also learn that it's okay to not know what you're doing and just do it anyways when you're paper trading. That's the point of it. Make mistakes in a safe environment. I hope you guys have a happy, safe, productive, and educational New Year's Eve. Aloha.